Most creatives didn't go into business for the number crunching and spreadsheets, but tracking the right financial metrics can keep you organized, put your business ahead, and help you uncover risks and opportunities in your business. So sit back and we'll get your metrics game on track with these 5 key financial metrics for every freelancer in 2020. Number 1, profit and loss. A profit and loss, or P&L, is one of the most common financial metrics most businesses track. It's common because you need to track revenue and expenses for tax purposes. But this isn't a long list of receipts. Think of this financial metric as a summary of the combined expenses and revenue over a specific period of time. There's one section with how much you've earned, and there's another section with how much you've spent in the same time period. The total at the bottom of the P&L is simply your revenue minus your expenses, aka your profit or your loss. A P&L statement for freelancers generally won't be more than 1 or 2 pages. The best part is that many accounting tools automatically create P&L statements for you as you record your transactions. For example, QuickBooks for self-employed is great for tracking income and expenses. All you have to do is go to the Reports tab to see an automatic P&L statement. Number 2, cost per acquisition. Pricing freelance services requires some mental gymnastics. If you're coming from a full-time job, it's hard to wrap your head around billing high enough to cover your expenses, especially those creepy ghost expenses. And I'm not talking about an AppSumo deal you bought, those are easy to track. Ghost expenses are the time and energy you devote to activities that keep your business operational. One of those ghost costs is cost per acquisition. Most freelancers aren't running ads on Facebook or Google. They're engaging on these platforms through SEO and social posting to find leads organically. That time and energy is a business cost. So how many hours do you spend attracting leads to your services? There are 2 primary ways to track this. The first is determining an internal hourly rate that you pay yourself. It helps you figure out how much certain activities are actually costing you. Let's pretend that I'm in the market for a white paper client. I spend an hour on LinkedIn looking for prospects. 3 people show interest. I convince 2 of them to schedule a call with me. After a half-hour call each, I spend 2 hours drafting 2 unique proposals. Phew, that was a lot of work. Finally, 1 person accepts my $4,000 bid. But between additional calls, research, writing, and basic admin work, the white paper takes 15 hours to complete. So, how much was my cost of acquisition? I spent 19 hours from prospecting to completion. $4,000 divided by 19 hours is $210 per hour. Not bad, but 4 of those hours are spent trying to make the sale. So my cost of acquisition is $210 times 4 hours, equaling $840. Ouch. Almost a quarter of my earnings came down to client acquisition. That's an example of a ghost cost. The second and easiest way to track customer acquisition is by outsourcing or automating it. That's when it changes from a ghost cost to a line item you can write off in an expense column. You might hire a marketing team or a virtual assistant to handle lead gen and conversion so that you can focus on client-facing work. Let's revisit the last narrative through the lens of outsourcing. Pretend you outsource the work mentioned above to a virtual assistant who bills you at $20 per hour. You still have the same ghost expenses, but overall things are simpler. Your assistant handles 3/4 of those prospecting hours we mentioned before with the same outcome. Suddenly, your involvement in the job drops to 16 hours and you just saved over $500 by turning a ghost expense into a line item. Number 3, growth. As Ramit Sethi likes to say, you can only cut so many expenses, but you can always earn more money. It's common to hear freelancers talk about their earnings as feast or famine. There are months when they earn a lot of money, times when the checks slow down, and there are average months that come somewhere in the middle. This up and down pattern could be worse than living paycheck to paycheck because freelancers tend to not know which season, feast or famine, is coming next. That's why it's important for freelancers to track growth. Again, QuickBooks is great for tracking growth because it's where you already input your revenue and expenses. A bar chart may go up and down from month to month, but throughout the year, there should be a clear increase in average revenue. But either way, you'll never know unless you track it all and find out where your trajectory is headed. Number 4, revenue diversification. Revenue diversification is another important financial metric for freelancers to track. You want to make sure your business can stay profitable even when your main client or service isn't selling the best. There are 2 types of revenue diversification to pay attention to. The first is making sure that a single client doesn't represent too much of your income for more than a few months in a row. Here's a good rule of thumb to consider. If one client accounts for more than 40% of your monthly revenue, that's a dangerous place to be. What happens when the client pauses or lowers the contract? The other form of diversification applies to the category of income. Building multiple income streams can be a great way to safeguard against changes in your field. Many freelancers also offer books, courses, consulting, and even software tools to add another stream of income to their business. This way, you can make your income stream more predictable and reliable. Number 5, target versus actual. Make a chart for yourself with 2 columns labeled target and actual to help you remember your goals and track your real progress. Whiteboards, Google Sheets, whatever you need, write it down and look at it. You can make this chart track almost anything in your business, like the number of new leads, number of blog posts you publish, and project pitches you send out. Anything. By putting goals and progress next to each other, you can create incentives for yourself, which means more rewards for you. So there you go. You may be a one-person business, but you are still a business with real metrics to track and record. Always remember, what gets measured gets improved. And now you can check out our video on how to write a price increase letter so you can take all of these tips straight to the bank. Number of new leads, blog posts you publish. I can't unless you track it all and find out where your trajectory would track. Most freelancers aren't running ads on Facebook or Google. Aren't running ads on Facebook or Google. They're engaged on these platforms. Man, this is one of those sentences.